Hello and welcome to today's video, which is called S&P 500 trouble was called and expected, but it had reached quite far. So let's examine what is the situation, not just to the pre-market, but from the medium-term perspective as well. Such is the daily chart, but what I am focusing here on is the perspective that various periods of moving averages, meaning percentages of stocks trading above these, give, and the picture is far from satisfactory. I don't see 200-day doing all too well. This 50-ish level is not really satisfactory, not really. And the short term, well, that's another story with the 50-day approaching 70, bumping around without prices really going south, and the 20-day, well, not showing a picture of any immediate strength, so we are sideways at best. One note regarding stock charts charting, you know that this is the same index, yet the daily candle being shown is different, very different. I don't know why, I have double checked, but that's the way it is in stock charts, so don't let it get you off guard. Here we go, with advanced decline line, kind of satisfactory, building up a bearish divergence. It can resolve, it can trade on, or it can resolve itself, meaning bullishly, or with the decline, or it can just go sideways for some time. Advanced decline volume is most promising out of these three, because new highs, new lows are not firing on all cylinders in the least. Kind of, if you look at where this retracement is and how it corresponds to the horizontal supports and resistances that I've been laying out in prior videos, that's kind of understandable. So don't ascribe too great a conclusion to that, because we must frankly look at what has been driving this ascent, this relatively solid session, meaning it could have been a lot worse yesterday. And the picture is clear, it has been risk-off perspective. Note tech, note discretionaries to staples, note financials, even the beaten down healthcare, among beaten down real estate, when these sectors that had been earlier weak are catching up to the upside. That's rarely a long-term sustainable driver of a bullish upleg. And this is what's behind the hood when I talk about the current setup being not really optimal for bulls, and this is how I have commented on that earlier today in the premium intraday channel for equities. This is the kind of analysis that is expanded to length, and I covered that within the newsletter, within the swing trading analysis, meaning within trading signals and stock signals. But today I wanted to give a perspective to intraday channel, and it is easier for me to bring this to you within this video right now, so that's what I'm doing. Expect no great move thanks to core PCE data. Fed is playing its cards close to its chest. When it comes to Nasdaq, failure to rally during the second half of the day was an opportunity missed that pains greatly, and it is, on the other hand, frankly encouraging that we had not seen a decline during the Asian and European hours. conversely it's sideways and keeping the bulls in the game. However, note the last two lines. Downside risks have markedly increased in probability as NVDA pullback yesterday intraday had not been superseded, followed by ascent into the close, approaching the opening value, the opening bullish gap. And this is kind of what's troubling. Do I expect a tech top in here? Usually that's not the case, based on one stock that I'm talking with clients quite often whenever it makes sense to do so. Today I'm not showing you 15-minute perspective, but hourly perspective, and this is more fitting to the current tug of war in a very tight range within the so far neutral outlook. Hence, much depends upon the appetite during Friday's session and the sectoral view and how the bond market would be doing, because frankly the dollar had not been doing great and NVDA daily candle is not convincing. It needs some time to work off yesterday's weakness. Here is the dollar clearly below 100, not what the bulls want to see, but that's intermarket and it can take a while to catch up with the USD. And within this video I was covering predominantly the intraday perspective and highlighting what could come back to bite the bulls in the not too distant futures, meaning over the next couple of sessions. So make sure to stay tuned for tomorrow's extensive video and review the prior ones, especially the Wednesday pre-NVDA one, which has been packed and has led to clients riding tremendous gains in the run-up to the earnings announcement, followed by that exactly price path charted. My chart page will help you set aside for the based on what and how it trades.